Hello and welcome to WTO Forum. For centuries, trade finance has been the lifeblood for international commerce. A significant portion of the world's exports are underpinned by such financing. But in the last year, we've seen this credit either evaporating or becoming much more expensive, and few experts doubt that this is one of the reasons for the sharp decline in trade for the last 6 months and is likely to contribute to further declines for the rest of this year. We're very fortunate to have with us two experts on this matter today, Kimberly Wheel, the Secretary General for the Berne Union, and Steve Beck from the Asian Development Bank, the head of trade finance. Welcome to you both.
Thank you. Thank you.
Kimberly, let's start with you. How did we get into this situation, and what's the best way to extricate ourselves from it?
Keith, thank you very much. It is indeed a pleasure to be here with you today. I think I have to sort of cast my mind back to how this all started. I'd say the first signs we saw surely were the subprime crisis that hit the U.S. And at that point, they were very much structured securities, very much isolated to the very large institutions in the United States. However, as time unfolded, we saw that this crisis started then infecting the international banks. They began to feel some of this squeeze on their capital, some of the inability to provide as much financing as before. But what you're talking about really took place in the last 12 months, and that's when all of this affected the real economy. So what I have to say there is that's trade, that's financing commodity flows, that's financing capital goods, that's large infrastructure projects, and all of that is what we're trying to alleviate the financing flows for today. Now, the association I work for, the Berne Union, is known as the International Union of Credit and Investment Insurers. It's got 50 member companies, both public agencies, export credit agencies, and private insurers from over 40 countries around the world. And the role of these companies is to help trade flow by offering credit insurance to either the exporters or to the banks that are financing the exports. And ironically, in this period, the demand for the products from Berne Union members has been very high, increased over 20% in the last year. However, with the slowdown in global trade, Berne Union members are also seeing that some of their volumes are declining. But working together with colleagues in the multilateral and other banking institutions, we are trying to get trade flowing again.
Steve, what's the perspective in Asia?
Well, the situation is really quite difficult because a lot of Asian growth was predicated on exports from the region to the West. And as we now see the United States and Western Europe falling into recession, Asian exports have declined substantially. So that's not a good situation. Compounding this problem, of course, is the fact that in addition to lower exports, which means that fewer people are going to be employed both in Asia and even outside of Asia, is the fact that there are remittances that are decreasing. And remittances are a very important part for a lot of Asia, especially poor Asia, developing Asia. And as the recession continues in North America and Western Europe, those foreign workers from Asia working in these parts of the world aren't able to send back as much money, and that's perpetuating the problem. So there are lower exports, there are job losses, lower foreign exchange earnings for developing Asia, lower remittances, the possibility of social unrest, which has to be considered. And all of this is sort of compounding the financial problem with respect to trade finance. Kimberly mentioned the problem with respect to capital, that a lot of international financial institutions have much less capital available for lending in general, including for trade finance. With financial institutions falling into some sort of financial trouble, there's concern about counterparty risk. And this is also weakening the system's ability to provide financing to fuel trade internationally. And there are a number of other elements. I'll let you ask some other questions,
Well,
so I don't go on too much. But I'd also like to have an opportunity to talk about what ADB is doing.
You should jump in on that.
Right.
So it's two things then. It's the liquidity shortage, and it's perhaps an irrational aversion to risk, and it really is the developing countries that are being hit the hardest,
Yes.
isn't it?
Yes, I think what we've seen is that trade finance in and of itself is quite very good in working with emerging markets and developing countries, because they are transactions that have a very identifiable, transparent cash conversion cycle. What we're seeing now is, particularly for the international banks, a big focus on risk-weighted assets. And in that context of the recent Basel II changes, the emerging markets are being treated, penalized for doing transactions in emerging markets. And that's actually compounding the problem with the lack of capital and liquidity and the risk-weighted assets.
How is the Asian Development Bank contributing to the solution to this problem, Steve?
We are going to our board of directors on the 31st of March with a proposal to increase the trade finance facilitation program to be able to assume $1 billion in risk at one point in time in support of trade. So on a rollover basis, we anticipate being able to support at least $2 billion in trade a year. And that's support that will come in the form of guarantees and liquidity. Asian Development Bank, being a development bank focused on helping emerging Asia develop economically, focuses on countries like Pakistan, Bangladesh, Cambodia, and Indonesia, Philippines, and throughout Central Asia. And we plan on expanding our operations substantially in terms of the number of countries that we're working in, especially focused on countries that are developing in Asia, emerging markets, and as well as the number of banks with which we work to support trade in the region.
Do you think that there's some growing evidence of the need for closer cooperation between, for example, your members who cut across a wide spectrum and international and regional financial institutions like ADB?
Yes, I think there certainly has always been a good relationship between the export credit insurers and the multilateral institutions, but at this point in time we're really being asked to come forward, step up to the plate, and pool our resources in the best way we can possible. And through this series of meetings that are being held under the umbrella of the WTO, we're finding it very beneficial to have these major players all together in the room to exchange information at first, and then to exchange ideas to hopefully develop solutions for this trade finance crisis.
Is that how you see it, Steve?
Yes, there are a lot of efforts going on now to coordinate efforts among a lot of different institutions. And I'm optimistic that between all the initiatives that are being taken now, not just by ADB, but also other multilateral development banks working in partnership with the Berne Union's membership and private commercial banks, that will be able to tackle this, this problem.
Kim Wheel, final thoughts.
Well, I think that it's a very interesting time for all of us. I think those of us who've been in trade finance for many years are finding that this is quite a shock. It's never really happened to this extent. But on the other hand, we're seeing there's a lot of international goodwill to work together to help get trade flowing again.
And Steve Beck, you have the last word.
There are substantial problems, clearly, that we're all facing now. And I think that there's consensus around the idea that if we can cooperate to come up with new initiatives, that we will be able to get the kind of support that companies and financial institutions need to get the economy moving again internationally.
Steve Beck, many thanks.
Thank you.
Kim Wheel, thank you to you.
Thank you.
And thanks to you for watching WTO Forum.